Peter Thiel's $5 billion retirement account. ProPublica explains how the entrepreneur racked up billions in tax-free gains over the last 20 years, utilizing a loophole in the Roth individual retirement account to cash in on PayPal, Palantir, and Facebook. Joining us this morning, one of the reporters who broke that story, ProPublica's Justin Elliot. Justin, welcome. You know, we had Jesse Eisinger, your colleague, on not too long ago, and he said you guys would have more on the tax front, and he obviously wasn't kidding. I hope you can talk about how this Roth was developed, how it started, how it evolved, and then what happens in 2027.
Sure. So as many people probably know, the Roth is a special tax-free account. So any kind of capital gains, interest, dividends that occur within the Roth are totally tax-free. So it's a very powerful thing. So what our reporting found is that Peter Thiel, back in 1999, purchased his founder's shares in the company that would become PayPal with his Roth IRA, which at the time had a contribution cap of just $2,000, and it grew from there.
Indeed. And then come April 2027, he's going to be able to withdraw how much money tax-free?
Well, as of 2019, we know that the Roth had $5 billion in it. And I think it's important to note that this growth from under 2,000 back 20 years ago to 5 billion today does not just reflect the fact that Peter Thiel is a brilliant investor, which is something that we all already knew. It also reflects the fact that these founder shares he bought in the company that would become PayPal were priced at the time at literally a tenth of a penny per share. We found an SEC filing that suggests that those shares were actually at below fair market value. And you're actually not allowed to purchase assets below value with your Roth. So there's sort of unanswered questions about how exactly this happened.
Right. So you're saying that those shares, when they went into the IRA many years ago, they were actually undervalued. But at the same time, right, let's say that they were fairly valued and they were worth pennies instead of 1/10 of a penny. How could he have known that they would be worth millions or billions even years later? So how do you, I guess my question is, how do lawmakers sort of go after this?
Sure. I mean, it's a great question. I mean, well, going back to the early months of the company that become PayPal, I mean, you're absolutely right that he couldn't know that it was going to, become worth tens of millions. But actually, just the month after he bought these founder shares, the company did raise $500,000 from outside investors. So there already was clear promise there. The larger policy issue here is that when Congress created Roth IRAs in the late 90s, it was really intended to be a sort of modest tax incentive for middle-class Americans to save for retirement. That's why they imposed these strict contribution limits of how much money you could put into one of these things. So I think the question now is there really any policy justification for, ultra-wealthy people like Peter Thiel having literally billions of dollars in a tax-free account? Why should he get that advantage versus another investor? Clearly, that's more than enough to retire on. So that's really the question here.
Justin, I'm trying to figure out the right framing for the problem, for the issue here. Tell me what you think of this. It seems like U.S. tax law is getting hacked by the rich. In this case, we're talking about billionaires. And there's sort of this asymmetrical data thing going on where the billionaires can constantly adjust their approaches, their tactics to find these enormous loopholes, and yet Congress doesn't have even anonymized data to understand how the law is being exploited. I'm sure they're just as surprised as we are today that this is even happening, because we've heard some of the response to ProPublica's initial report. So isn't this sort of a structural problem where, for especially the digital age, Congress has to change the way law is made? They need to be able to push out software updates to the IRS on a constant basis.
Yeah, I mean, I think that's absolutely an aspect of what's going on. And actually, the GAO, which is the investigative arm of Congress, has been putting out reports for years about large IRAs, although not as large as Peter Thiel's. And the IRS really appears to be doing little or nothing to enforce the existing rules. And I think part of the blame for that should be put on Congress, which is, for many years has been cutting the IRS's budget. So, I think in some ways it could be as simple as actually enforcing existing rules.